Okay, you're all set, Mr. Mayor.
All right, thank you. And before getting into business, I just wanted to highlight that today was Bradley or Butch Gordon's 40th year, perhaps even a little bit more if you included the rec experience, which means he is the only employee left from the former townships, I believe. So that's a pretty impressive feat. But welcome to our Wednesday, October 2nd, 2024 special meeting. Moved by Deputy Mayor Lang, seconded by Councillor McDonnell. Be resolved that the October 2nd, 2024 special council meeting of the Township of South Glengarry now be opened at 6:04 p.m. All those in favor? Carried. Approval of agenda. Were there any amendments?
Through you, Mr. Mayor, there are no amendments to the agenda.
Thank you. Moved by Councillor Jaworski, seconded by Councillor Bougie. Be it resolved that the Council of the Township approve the agenda as circulated. All those in favor? Carried. Are there any declarations of pecuniary interest? Seeing none, we'll move to the approval of the minutes. Were there any corrections or amendments noted? Seeing none, moved by Councillor McDonnell, seconded by Councillor Jaworski.
There's no minutes to approve, Mr. Mayor.
Thank you. That is important. So, no, sorry, there's no minutes approved. My apologies. Presentations and delegations, 5A. Presentation of 2022 draft financial statements, KPMG. I believe if Ms. MacDonald can introduce KPMG.
Good evening, and through you, Mr. Mayor, I'd like to welcome Laurie Huber and Chris Clark from KPMG, our auditors, who are here this evening to present our 2022 financial statements. I'll throw it to them.
All right, thank you very much.
Wonderful. Thank you very much, Mr. Mayor. Good evening, Council. We are pleased to be here tonight to share with you the highlights of our audit for the fiscal year ended December 31, 2022. And I'm just hoping to be able to share my screen, which it looks as though it's cooperating. So if I could see a thumbs up, make sure that you can see what I can see on my screen. Wonderful. This is great. So tonight's package would have included two fairly significant attachments. Hopefully you've had a chance to do a bit of a pre-read in advance of today. Joining me here tonight is a senior manager, Chris Clark, who is on the line, who's very much worked in the detail with the treasurers over the course of our tenure for the fiscal 2022 audit. What I proposed here tonight is to really focus on the colored document that we've got on the screen here, which really marries up all of the pieces that we should be having a conversation with yourselves, being those charged with governance, relative to your financial oversight role, relative to the financial reporting process, both on the audit side of the house, and then also share with you some of the highlights from the actual numbers themselves from the accounting piece. So with that, we will jump right into the details of our report. And I'll start here on this page number 6, which is materiality. So normally this would be included in an audit plan, but recognizing this is actually the first fiscal year that we were appointed as auditors of the municipality, I wanted to give you a little bit of background and a little bit of perspective on where we came to complete and execute our audit. So I would say most of you are likely familiar with the financial statement audit, but just as a reminder, from a high level overview, we certainly do not look at all of the individual transactions that culminate into the financial statements. We do audit to a level of materiality, which we set each and every year based on the volume of activity on your statement of operations, which is common for the municipal sector. So when we look at your municipal sector, we would typically focus on total expenses, because we know this year is a great example for yourselves that the volatility that can exist when there are certain capital streams of revenues. So the short version for 2022 is that we set our level of materiality to flesh out the size and scale of our audit procedures at an overall aggregate financial reporting materiality of $350,000. And that's important because we'll see that piece a little bit later on. So from the KPMG standpoint, based on our professional judgment, we can go anywhere between 0 and 3% based on those benchmarks. So you can see we're hovering there between the 2 and 2.5%, which I would say is fairly common for us to hold back a little bit on the maximum that we can increase materiality to, certainly in the first year, as we don't really have a history of the people, of the processes, of the systems, of the controls. So that's where we landed, and we'll see that a little bit later on, just as a reminder in terms of how we identify the pieces to study as part of our audit. You wouldn't have seen this before, but again, just a little bit of background in terms of a KPMG audit. So a KPMG audit is a risk-based audit, meaning we stand back looking at the financial statements as a whole, trying to identify where we believe there's a greater risk of material misstatement occurring, and certainly adopting an audit plan and an audit approach to mitigate those risks to an acceptably low level. Fortunately, we do audit a number of municipalities, certainly a lot of smaller, lower tier municipalities. So there's a lot of similarities and a lot of synergies that we see across those audit plans. So I would say municipal audits in general tend to be lower risk, or what we would identify as base. Outside of those sort of individual pieces that we might define, we're also required to address presumed risks of fraud related to management override of controls, which you'll see at the top of the page here. So that tends to garner some attention. It's certainly not meant to necessarily be a red flag. It's baked into any financial statement audit. It's been around for, 10 years or more. So you'll see a little bit later on the work that we did to mitigate that risk. But again, not unique to your sector. It's included in every single audit that we do in Canada. So jumping into the numbers themselves in terms of fiscal 2022, what we've pulled out here is your balance sheet, otherwise known as your statement of financial position, which really highlights the close of business, all of the assets and all of the liabilities at December 31. What we've given you here on the right-hand side are some of the variances that you will see in terms of increases or decreases, recognizing this is October 2024. This information is a little old at this stage. But certainly some of the things, just to really highlight the story, I would say, for the year, and you'll see this in a lot of the variance analysis on both the balance sheet and the income statement, there was a lot of capital activity that took place in fiscal 2022 that you'll see down here. So what that means is you used a lot of cash through the course of the year to fund some of that capital. You will see your receivables are increased at the end of the year because you've accrued grants that were owing to the municipality, not yet paid for some capital grants that you were owed. You can see in accounts payable and accrued liabilities, those have increased as well because you likely had trades and contractors payments that had not yet been paid that are sitting there on the books. So you can certainly see the story there in terms of the significant capital activity. In terms of the aggregate impact for capital, you did have in 2022 total additions of about $8 million. Some of the highlights there you'll see on the right-hand side of the page. And then certainly to offset is the annual charge for amortization that was about $2.7 million. The other piece that I wanted to draw your attention to that we'll see a little bit later on, something that is unique, I would say, in this financial statement audit is based on the information that we received in the audit work we did as part of the 2022 financial statement audit. We did identify 2 errors in previous periods, which led to prior period adjustments. So really at a high level to share with you, there were 2 items, one that you'll see here on your balance sheet. So you've always had a landfill liability. The accounting standards have required you to record a liability based on certain parameters in terms of the impact of the usage of your landfill to date. You had to include that as a liability as you were using that landfill. You had to accrue for the ultimate closure and post-closure of that facility. Part of the process as we undertook the audit for 2022, we were required to take a look at the opening balances for the previous year from the prior auditor. We did do that, and they had highlighted in their report as well some concerns around the accuracy and the quality of the data that had gone through that calculation. Fortunately for us, as part of the fiscal 2022 audit, the team did go out and gain new information from an engineer to get updated data to really marry up that calculation in fiscal 2022. Sorry, I keep saying 2023, but it's 2022. So really the short version is that you will see in the back of the financial statements in the note restatement 15, the net impact of that adjustment that actually related to previous fiscal years was about $2 million. So what I can share with you in another way is that we've trued up essentially the liability to what it should have been in previous years in the current year through this restatement. So hopefully that makes sense, and certainly welcome any questions from the group if there are any on that item a little bit later on. What we like to do in our audit findings report is not necessarily focus on the numbers, but sometimes pictures will provide a different story. Because there's such a large investment in tangible capital assets within the municipality, this just breaks down the tangible capital assets by type. to the extent there's any interest there to see where the bulk of the items are. And you can see in your case, certainly significant investment in roads, which is what we see commonly in lower tier municipalities such as yourself. One of the other components that we see as a component of your balance sheet, we will see in the notes to the financial statements, your accumulated surplus or your retained earnings, if you will, or your accumulated equity, which is the total of your assets minus your liabilities. A component of that is something that is within your control, as I'm sure you're very much well aware of, and that's your reserve and reserve funds. So taking a look at reserve and reserve funds, there's two pieces here that I would say that we'll see on the KPI. One is around your reserve and reserve funds and where they've been trending year over year. You can certainly see there has been a decline, and we will see in the financial statements, you did use your reserves more than anticipated as part of the budget for fiscal 22. And part of that equation was all of that capital activity or capital investment. One of the KPIs that the province will come at you and take a look at in terms of them studying the financial health of the individual municipalities, they do tend to take a look at your reserve and reserve funds as a percentage of your operating expenses. You'll see at the bottom of the page, they would suggest anything above 20% would be green. Some might argue that that KPI is a little bit antiquated, but you can certainly see well north of that minimum standard from the provincial perspective, but you have been declining over the course of the last 3 years as you've been using your reserve and reserve funds. I often get a question a lot from council to say, what should my reserve and reserve fund number be? I hate that question if I'm being honest, because it really very much depends on really the plans that you have for the future and some of the strategic priorities that can certainly differ across municipalities. So that's always an interesting one to tackle. Something else that we look at from a KPI perspective, along with the province, is taking a look at your tax arrears as a percentage of your current levy. So as we know on your balance sheet, you are required to accrue all of those taxes that should have been paid will sit as an outstanding taxes receivable on your balance sheet. One of the KPIs takes a look at the health of those receivables relative to the current levy. And so what that is doing here on the page for yourselves, you can actually see some improvement over the course of the last 3 years as that percentage has declined. So the declining percentage is actually a good thing in this instance. The province would suggest anything less than 10% would be a green check mark from their perspective. So you can see just shy of that standard for the current fiscal year for 2022, but certainly close and trending in the right direction. Moving on to the second most significant component, I would say, on your financial statements is your statement of operations. And this is likely something more near and dear to your heart, as this is something that you certainly monitor through the course of the year relative to the budget that's set for the current fiscal year. So this outlines all of the revenues and all of the expenses in year. And if we jump right to the bottom, you can see that the municipality reported a surplus of about 2.3 million in 2022, which is pretty close actually to budget. Again, on the right-hand side, you'll see the commentary in terms of why some of the increases and the decreases. But one of the things that I wanted to say as well is that there was a restatement on the income statement related to the contributions from developers through the course of our audit work. This one isn't necessarily a unique one. We do see this more commonly than what we would hope to see, but as municipalities take ownership, if you will, of developer assets, those need to be recorded as your tangible capital assets on the books. So that was an adjustment in year. You can see there that's increased your revenue by about 440,000 in 2022. Based on the conversations of us discovering that through the course of our minutes review, we identified items from previous fiscal years and earlier phases of developments that hadn't yet hit the books. So that would be the second component of the restatement to previous years that I wanted to alert you to that is uniquely different for fiscal 2022. As we look at operating expenses on the face of your statement of operations, you're required under public sector accounting standards to show the expenses by department. This is just another slice and dice of the total expenses in aggregate, but more so by object, so you can see where the dollars are actually going. One thing that tends to be a focus of council, I would say, through the course of conversation tends to be the impact of wages and benefits. We did see in the file in 2022 relative to 2021, that number did increase, but recognizing it is 2022 and still pretty close to the pandemic years. So the increase is not unusual, I would say, relative to your peers. And when we look at this as a comparator to some of your peer organizations, the 29% I would suggest tends to be right in the middle to lower end of the pack. We usually tend to see that number to be somewhere between 26 and 35%. So that's really the comment to be made there. Just another way to show you the data that's in your financial statements. So getting to the numbers themselves, this is where we revisit that concept of materiality of $350,000. So how we do our audit is we break apart all of the significant financial statement captions on your financial statements, and anything that is greater than 5% of that materiality number, which is 17,500, that's the threshold that we really use to have a conversation with the team. So it's important for us to share with yourselves, being those charged with governance in your oversight role, the misstatements that we identify through the course of the audit. There are two types of misstatements. One would be the first around the corrected items in the financial statement. So we are required to ultimately have management sign and agree to each of those through our conversations that they certainly are a product of management, ultimately the financial statements. And so those aren't in this detailed report, but we, through the course of our audit, had identified 26 corrected misstatements that were flowed through the accounts. The other component of the types of misstatements that are not in the draft financial statements are the uncorrected items. And those are the ones that we've highlighted here on this slide to give you a sense of what each of the individual items relate to. I won't go through the individual lines in detail, but really this is our tally sheet, if you will, to really marry up the impact on the current year income relative to materiality. As you can see, as we sort of net off each of these individual amounts, because some of them will increase and some of them will decrease income, in aggregate, $35,000, much less than our overall materiality. So we can certainly agree to have these items not corrected in the current year's financial statements. They will flow through the subsequent year's financial statements, but we've highlighted them here, recognizing it is a carryover. The first item is actually the same concept from your former auditor that identified an uncorrected item from the previous fiscal year that should have flowed through the current year. So I think that's likely enough to be said about that, but certainly well below materiality, and we can carry on. The next slide speaks to control deficiencies. So as part of any financial statement audit, we are very much interested in all of the internal controls specifically related to financial reporting. So as part of our audit, we will sit down with the team, understand all of the systems, processes, and controls that culminate into the financial reporting processes. So things like revenue recognition, things like procurement, things like payroll, all of those significant processes are part of our narrative and part of our description as we understand the control environment and ultimately identify those risks to tie back to our audit plan and our audit program. Through the course of our audit, we may determine, based on our judgment, whether or not we believe there are significant deficiencies in internal controls. I use my words carefully because it is a matter of professional judgment. So for your case, for fiscal 2022, we have made the conclusion that we have identified what we believe is significant deficiency in internal controls. And I won't go through all of the details on the slide, but what really we tried to say, it was an interesting journey, I will say, through the course of the audit. As we know, we had worked with 3 treasurers over our tenure as the audit sort of carried on. And essentially, when we boil it down to all of the observations, I would say the volume of accounting that was required through the course of the audit was certainly a flag. I would say the restatements and the fact that there were multiple restatements was another flag. And the other flag I would say is around the internal controls and the segregation of duties and the reviews and approvals that we would normally expect to see. So ultimately, we defined all of these items to encompass what we would frame a significant deficiency. So really what that means is going back, revisiting our audit plan, making sure we've done enough work in light of the observations that we have made. So it is our recommendation, and certainly with a formal treasurer now in place that does have some historical and institutional knowledge, certainly the plan forward would hope that the audit would not follow a similar trajectory for 2022, with certainly a better plan forward to make the audit more robust, and certainly the audit preparations as well. In terms of the items here on this slide, I think I've covered the highlights to speak to the two pieces related to the restatements. This slide here gives you a little bit more insight into that presumed risk of management override of controls. Again, just as a reminder, not unique to your organization. It's a presumed risk across all financial statement audits. What I would say is unique to your organization, which ties back to that significant deficiency in internal controls, is the implications of the control environment related to the reviews and approvals that we would normally hope to see in terms of segregation of duties of key processes. It was a quiet year in terms of change, either from accounting standards or auditing standards. So again, when you look at your financial statements, nothing significantly new and different for 2022. I dare say that will be different for 2023, and that's a nice segue, which what we've got here flagged. As we've been working with a lot of municipalities for 2023, pretty significant new accounting standard coming into play that I know the team is very much well aware of, and that is asset retirement obligations that will have some implications on your financial reporting moving forward. So that takes us to the back in terms of some of their other required communications. So the first one I wanted to stop on briefly was just any matters related to independence. So as we all know, that's really the beauty that we bring to the table, is that fresh set of eyes, that independent view. I look at the financial reporting process certainly from a three-legged stool. So management need to own the financial statements. They are a product of management. We need to audit them as that independent set of eyes. And then of course, yourself being those charged of governance need to provide that oversight. So certainly we have not provided any non-audit services that might be thought to encroach on our independence. However, I would say lots of conversation, certainly around the level of accounting assistance that we needed to provide to remedy the accounts, to get them into a form where we felt comfortable opining on them. So that would be the only comment I would make with that. Certainly made some safeguards and some workarounds to make sure we weren't perceived to be auditing our own work, but certainly that's something that I wanted to flag to the group. In terms of our independent auditors report, it is a clean audit report because we did make the restatements relating to previous fiscal years. So in our opinion, we believe the financial statements do present fairly in all material respects the financial activities for the fiscal year ended December 31, 2022. What is new and different is that we are required to alert a user of the financial statements in this bottom paragraph here, which is the emphasis of matter, to say, what you see in 2021 as your prior year comparative in your 2022 financial statements is different from the issued statements in 2021, which is why we have that note 15 to marry up the 2 years. So that will go away in the future, assuming there are no restatements, but I won't say it will go away in 2023 because with the asset retirement obligation new standard, that is required as well. But in normal instances, you would not expect to see that there. Similarly, at the top of the next page, in terms of the other matter related to the comparative information, this is essentially saying to a user of the financial statements, even though we are opining on 2022, we've also audited the adjustments that impacted previous years, and those were part of our current year audit, and certainly content and happy with the adjustments therein. The body of the auditor's report is a standard audit report in Canada. And there is a good reminder, again, around that three-legged stool in terms of the responsibilities of management yourselves and along with ours as your external auditor. So with that, I think that's a good place to stop, Mr. Mayor. I know I've been talking for a lengthy period of time, and I suspect there likely are a few questions on the content we've covered. So I will stop sharing my screen so I can see everyone again and welcome any questions from the group if there are any.
Okay, thank you. I believe Councillor Jaworski has a standard annual question. I don't know if we will start with her or if there's a question from around the table first.
Well, thank you, Mr. Mayor. Through you. Yes, I generally ask about the landfill obligations. And my sense from reading through the documents and what's been presented is that our landfill obligations are more well-defined now, which I think is a very positive thing going forward. Thank you.
Are there any questions from other members of the council presently? All right, and if I may, like I know 2022 is fairly busy in terms of its in terms of the work carried out by council. And you've highlighted I guess the accrual surplus. Given how much work was done, I would imagine on a cash basis, it would not be the same. And that's normally like something that we do receive. Would you have that number, Andy, to just highlight since we're on camera?
Mr. Mayor, perhaps could you re-ask that question, exactly what you're looking for?
I suppose it'd be more like the cash, like the cash version of instead of accrual, because we often operate without PSAT being directed to us. Like at the end of the year, our surplus or deficit swings anywhere from 200,000 to 450,000 typically, and I'm just curious about that number, taking away the like amortization, etc.
Yes, perhaps that's a good question. So perhaps I will draw your attention to note number 9 of the financial statements, which tries to give you a budget reconciliation, recognizing the financial statements are recorded under the PSAS basis, and you don't necessarily budget under that basis. I'll take you to note number 9, and that will give you a little bit of reconciliation between the two. And I think perhaps the number that you might be looking for is the operating deficit for the year that is sitting in there of about 455,000.
Okay, and that's within the realm of what typically we've had in the past, like 10 years plus or minus, kind of flows that way. So a lot of work got done, and not at a detriment because we had employed a reserve. So okay, thank you. That was that question. Any further questions? All right. Did you wish to proceed, or were you good at stopping on that slide?
I think we're good, Mr. Mayor.
Okay, great. And I just to make sure that I'm not missing a resolution. No, so then that's great. We'll come back and eventually, as these are in draft form, we'll approve them once they are in a full form. And thank you very much for your service.
Okay, our pleasure. Take care. Bye-bye.
Thanks, guys.
Bye for now. Sorry, I'm just on the wrong page for the resolutions. I'm just finding that so I read properly. I believe we're going into the closed section portion. I have it on 3 slides, so again, apologize. Bring up the agenda in full. Yes, there's no action request, no bylaw, no item for consideration, no consent. So closed session. Moved by Councillor McDonnell, seconded by Councillor Jaworski. Be it resolved that council convene to close session at 6:31 p.m. to discuss the following items under section 239(2) of the Municipal Act, SO 2001. 2. A meeting or part of a meeting may be closed to the public if the subject matter being considered is E, litigation or potential litigation, specifically in this case, litigation. All those in favor? Carried.
Just a moment, Mr. Mayor. I'm going to take us offline.